Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen. I'm Richard Morco, and here is Mike Carnevale, Conversations with, where Mike will inform us where the economy is going. Don't make any mistakes. We're watching, Mike.
Okay.
All right.
Pressure's on.
Well, today is the hottest day of the year. And we're talking about how August worked out. It was not the hottest month from an investment point of view. Mm-hmm. And in fact, it was down.
Right.
And this is expected because it is usually 10th of 12.
Yes.
During the year. So you were supposed to go away in August. We hope you're coming back now. And what do we expect for September?
Well, September's actually the worst month of the year.
Go away again.
But hold on. It's not all bad. The last 3 Septembers have been negative. The prior 3 were positive. So if that trend continues, we're starting a positive trend again.
We're talking with Mike Ouija Board Carnevale. Anyway, okay, so August ranked 10th of 12, and this is the last 10 years mixed with 6 down. So there's been up August.
Oh yeah, August. But generally speaking, August is not a good month, and it wasn't this year.
But yet, year to date, we're up 5%.
On the Dow, yep.
On the Dow. S&P is a whopping up 17.
Mm-hmm.
NASDAQ up 34.
Yeah. So most people's returns are between the Dow and the S&P. No one has all their money in the NASDAQ,
No, nobody, nobody's selling it like this. I think Vanguard started off with the S&P fund, but does anybody do a NASDAQ index fund?
There is one company called Invesco does it. QQQ.
Yeah.
That's it.
And but that's up 34.
Yeah.
Would you say that is a good idea of a fund, or?
Probably not a place to put a lot of money because it's all the high-tech stuff.
Yeah.
And, as great as the NASDAQ is this year, when we had the big sell-offs, in 08 and 09, the NASDAQ was down over 50%. So
if you are not the best timer in the world,
stay away.
Probably not the best idea.
Correct.
Bonds, the 30-year rose to 4.37% from 4.02.
Yeah.
And the 13-week Treasury is now 5.3.
Mm-hmm.
And that, would you say that does reflect what happened in the raising
yes.
rates?
Yeah. And that's close to where money market funds are right now. And there's been trillions of dollars going into money market funds because it's the item that has the highest rate.
So what are they going out of?
I think they're taking money out of savings.
Just out of savings?
Yeah.
Who had money in savings?
Oh,
the rate is low.
Well, but investment rates were also very low for so long. People kind of forgot about it. So, I'm not going to go into a money market fund. I don't want to go into the stock market. I might as well just leave it in my savings account. and then the short-term rates really have gone up, as you know, in the last year and a half. And I think a lot of money is coming out of bank savings to money market.
Okay, all right, let's get to the technicals.
All right.
The short-term sentiment is slightly better. The 200-day New York Stock Exchange moving average is now 58% versus 69 a month ago. And 40 to 80 is average risk. Now,
Right.
tell the public what that really means.
Well, ideally, when do you want to buy stocks is generally when they're low rather than high. So that 200-day New York Stock Exchange moving average takes back a year, because a trading year is about 200 days. And what percentage of stocks are above their average price over the past year? You'd like to see that number low, right? Because that would mean prices are on the low side. And we saw a lot of improvement last month. Prior month was 69% were above their average price, now only 58. That makes sense because the market was down 2.5% in August.
Yeah.
And generally, historically, anything between 40 and 80 is considered like average. So you can see we're getting close to the lower range of average.
Well, as you're right, it's slightly better. So we want to see it. We would want to see it go lower,
Right.
even.
Right.
And what do you think do you have any, does that look like it's on the cards?
That could very well happen. Yep. Because September usually is worse than August. If that's the case this year, you saw what happened in August. It lost 9 points. If it loses more than that in September, then you're back into the very low 40s.
And would that lead us to expect a hot August? I mean, not temperature-wise, but
I mean, October.
October,
Yeah.
yes.
Yeah. But generally speaking, October, November, December are good months. A lot of people think October is a bad month because they remember the crash of 1987 and whatnot. But a lot of people don't realize that prior to that crash in October, the market really was up most of the year. So a lot of people think October is the worst month, but it really is September.
Were you around for the crash of 1987?
I had just
graduated?
graduated and was in the business, just gotten into the business, and I never really understood why people were all excited. But, when you lose 30% of your money in a day that you've invested, I guess that would be something to get a little nervous about.
Well,
But I was too young to.
You were too young.
It didn't really matter.
Okay. The volatility index remained at 13 for the second month in a row. 20, 25, less volatility, low fear.
Right.
So is this very, very low or
Very, very low.
13?
Yeah, 13. I mean, it's going to take a lot to get it above 20. You're almost going to need, one of those days where the Dow is down 500, 600 points to bring back the fear.
Gosh, we love fear, don't we?
Yeah, the low fear is not good.
Okay.
Because what happens when you don't have a lot of fear? You tend to take more risk, right?
Yeah.
And so that's usually not good.
But you want people to at least go into
Some risk.
some.
But when it's this low, people tend to take more risk because there's really no fear out there in the market. So why would you take a lot of risk? Nothing bad's going to happen, right? That's usually just when it happens.
The stochastic oscillator. Price in relation to its support over resistance level over a given period of time. Momentum always changes direction before price.
Right.
Can you give us a little bit of a read on that?
Well, all stocks or any stock or index is at a number. So let's say the number is 10. Something's trading at 10. Well, you've got to then look at, well, the support of the resistance of it. So support is, in the recent history, how low did it get? Let's say it got down to 5. Okay, in recent history, how high did it get? Let's say it got to 15. So, okay, it's at 10 now. Support is at 5. Resistance is at 15. So, where are we right now? We'd be at like 50, right? Right in the middle between the 2 points. And something has to happen to get the thing to move, the price to move. So it just doesn't go from 10 to 15 in a split second.
So what would be the momentum?
The momentum would be on the upside, people buying a lot of the stock.
Okay, and then
that would move that number up. And so if the range was from 5 to 15 and you were at 10, well, 10 would give you a 50 stochastic oscillator. If it went to 15, you'd be at 100. 100's the worst possible number. Last month, we were at 95. So what does that tell you? Geez, it would say, if 100's the worst it could be, 95, maybe things aren't going to be great in August. And
okay.
sure enough, they weren't. In August, the markets dropped, and what happened to that oscillator? It started to drop back down. 64 is still, so it's almost in the mid-range, right, of fair value. So, I mean, although it dropped a lot, that's a lot in a month, 31 points, but it's nowhere near the area where you would say, get really excited that stock prices were really going to start to go up a lot.
So 55 versus 78 a month versus a
That's
month?
the greed index, yeah.
That's
the
the
next
greed
index, yeah, right. And that's a CNN index that they made up by taking like 6 or 7 other technical indicators and making a proprietary index, But
Is it a well-respected?
it is,
measure?
yeah. I mean, you can look at that as opposed to looking at 6 or 7 additional indicators. You can look at that one, because that groups it all, they've grouped it all together. And last month, after a good July, right, the month before, there was a lot of greed. The index was really high. Market lost money in August, and what happened? That extreme greed started to backtrack. Still in the greed category, so it's still pretty high. And that's why I would say overall these 4 technical indicators were slightly better. 2 of them were really better, but the other 2 were, going in the right direction, but probably not enough yet to say, okay, things are going to start to really go up here.
So we can't expect that probably until October.
Probably until October. Probably sometime, I would guess sometime end of September, things might bottom out, and then you start. But you got to remember too that, when we say, well, things might bottom out, the all-time high for the Dow was 36,000. We're still at 34,000.
Yes.
So I mean,
well, of course, I always scream at you. Well, how much of that is inflation?
oh,
I mean,
yeah,
because like we were discussing how,
half of it is, I would say.
yeah. I remember riding along and listening to somebody in the radio. He says, well, it's gone up. It was this in 10, 20 years ago, and now it's this. And inflation just keeps flying along,
Right.
too.
Right.
So,
Right.
companies are going to charge more for their product, and then they're also going to charge more for their stock.
Right.
And some of it is inflation.
Right.
And some of it is value, I guess.
Right. Yeah. I mean, I think the long-term averages for stocks are around 8-9%. Inflation's probably 4-5%. So it's
Well, we
probably
get into
half.
inflation down
Further
further,
down.
yeah.
Yep.
Fed raised rates to 550. The major news, we're going to go into the major news. Futures market says that's it for this year.
Right. They next meet on September 20th.
And are you going to give us a prediction here?
Right now, the futures market is predicting 83% chance of no hike.
Well, your man, as you, Powell is saying, hey, it's not, we haven't looked at yet.
Right. Right.
So would you say then the meeting after that, if it hasn't gone, if it real terms inflation?
Yeah, the next meeting is, I think, the middle of November, and the odds of no hike there, I think, are in the 60s. Still likely no more rate hikes. They meet September 20th in the middle of November, then to the tail end of December for this year. And all three, majority no hike, but the odds are less clear of that the further you go.
Okay, we are going to here just have a little pop-up index. And that's of inflation and whether or not they raise. And that I go to Trader Joe's sometimes, and there was a snack a few years ago I really liked, but I kind of got off of it. But it was 99 cents for a bag of these. And then about 6 or 7 months ago, maybe a year, it went up to $1. I think it's at $1.49 now.
Yeah.
If that goes anytime between now and any next meeting, up another 25 cents, I'm predicting a rate hike.
Okay.
Now, people, that's absurd. But, you know, I just watch these things and say, how much can, you know, how much can this go up?
Yeah.
But, all right, so we're saying no hike, or the world is saying, basically.
The futures market, right.
The futures
is
market.
saying a no hike in September, on September 20.
Now, interest rates at central banks,
They've been going up.
they have been going up. Bank of England, Argentina, 21% to 118%, big.
A little bit of a hike.
But they have a history of that.
Right.
Elections in October, the Libertarian candidate got 30% in the primary, wants to use the US dollar and abolish the central bank. Well, seeing as Argentina has done such a poor job with central banking, that cannot be the worst thing that ever happens.
Right. But of course, causes concern for the people in power.
Well,
And does that lead to a January 6th?
well, Argentina, you know, South American, you know, a mix of Spanish and Italians, hot-blooded, and it's not happened really. I mean, the Perón was the big guy,
Right.
but the people have sailed along, and they've coped with it
Yep.
all the time. But what would they do, you know, using the American dollar? Well, who cares? Oh, we don't have a central bank. Yeah, but I got dollars in my pocket.
Yeah. Yeah.
Well, how can that not work out?
Well, I suspect it, again, it's,
And when you say central bank
yeah,
is going away,
right.
it's who controls the central bank
Right.
who might get upset. That's the powers that be.
Right.
January 6th. Well, are they going to do the January 6th? Or are the people going to do the January 6th? I would say it's not the people. I'd say this guy better wear Kevlar
Yeah.
and helmet, you know,
Yeah.
wherever he goes.
Yeah. Yeah. But it remains to be seen. They got an election coming in, I believe it's in October, so.
So if he wins or he doesn't win.
Right, right.
Okay, so we see Russia, 8.5 to
Raised it.
12%.
They're trying to halt, you know, the ruble made a big rally, now it's declining, so they're trying to halt that.
And so, okay.
Turkey, again, another big rate hike.
Turkey always, it's sort of the Argentina of Southeast Europe and Southwest Asia. All right. Brazil is the only central bank to cut.
Yeah. Things in Brazil seem to be getting better.
Well, I might go down there for what's that big event every year, Carnival?
Carnevale.
No, I won't. I think I'll withhold on that.
Okay.
And Fitch Ratings cut USS to A plus, no longer AAA,
No longer AAA.
because of higher deficits over the last 3 years.
There are very few AAA countries left. Most of them are Nordic countries.
How bad? What does this mean? This happened after we had the debt ceiling pretend emergency,
Yeah.
and we of course raised that. Maybe we cut the subsidy to some grandma somewhere, but that nothing really was done. So we raised it again, and we can, the sailor is still drunk.
Yeah.
So what is it?
A lot of people have said it's meaningless, the rate cut. I mean, that it had, I guess, marginally it would cost more to borrow, but
It's cost a lot to borrow now,
Yeah. Yeah.
So marginally, well, we can blame anything.
Yeah, but I mean, a lot of people have said that it's a non-event.
Okay. We will consider it a non-event till it isn't.
Correct.
KC Fed Summit. It's going to be that was in Kansas City. Powell said inflation hasn't been beaten. Warned of more rate hikes.
Yep.
We mentioned rate hikes before,
Correct.
and he's saying it could happen, which is kind of saying it will happen in a way.
Well, I think a lot of it is, they can accomplish things by threatening, which is working because,
You would say that was a threat?
yeah,
Okay.
and it seems to be working because, the Treasury rates are going up. So that means they may not have to raise the rates, just that the threat of raising them will, it's sort of like, they don't have to, your parents don't have to lock you in the room. They can threaten to. And you might say, "Ooh, what if they do? I better not." And
Well,
that accomplishes the same thing.
My lovely parents, unfortunately, and really unfortunately, are now deceased, so they will not be sending me my room. So they've lost that
Okay.
that little manipulation there.
So now you're doing whatever you want.
You're damn right.
Okay.
All right. So the oil over 85 a barrel. Yeah, who hasn't noticed that?
Yeah, that's really.
And the rig count at 631, eighth weekly decline. Well, why aren't they sending them more rigs out there if the price keeps going up?
Why are they? I didn't get what you said there.
Why aren't they putting more rigs in if the price is going up?
That's a good question, and that's another reason why Saudi Arabia, right, is saying, well, we're going to cut production because the current administration isn't in favor of more drilling. So
Okay, that's it.
Saudi Arabia would say, hey, we're happy with the way things are. Oil's gone from 80 to 85, 86.
Yeah.
You guys could do more drilling and put pressure on us to produce more. But if you're not gonna, why should we? We'll take the higher price. That's kind of, I mean, that could really backfire
On Saudi Arabia or the United
on
States?
the U.S.
Yeah, is it
Could really
kind of backfiring now?
It is it's starting to. Yep.
All right, now let's get to the science.
Okay.
The Red Sox, since there have been divisions,
Mm-hmm.
and I remember when there weren't divisions,
Yeah.
which you don't.
I don't, but
Okay, Junior.
it was probably a better time.
Yeah. Since divisions have finished last 5 times. Market higher next year, 4 times for an average gain of 14%. Worst year was down negative 2%. Currently, 3.5 gains ahead of New York for ahead of New York for last place. September slump.
Yeah.
So we're counting on you, Red Sox, to help the country out and lose.
Correct. It's starting already. Last 10 games, Yankees have won 8, lost 2. Red Sox have won 3, lost 7. So it's getting close.
It's going to be a nail biter. All right, inflation going in the right direction. And of course, I say this all the time. July consumer prices up 0.2%. And everybody will say, inflation is down. No, the rate of increase inflation is down.
Right.
We're still watching those little bags at Trader Joe's go up in price.
Correct.
Core, less food and energy. The Fed looks what the Fed looks at was up 0.2%.
Yeah. See, that's still high. Over the past year, whereas total inflation, consumer inflation, is at roughly 3%. The core is almost 5%. And that's the one the Fed is worried about.
And the July producer price is up 0.3%.
Right.
And up 0.8% for the year.
Right. So the core number is still high.
Okay. I read something I just picked it up and I don't know. It said one thing nobody measures that's way up is services inflation.
Right.
How that's not, is that in anything here?
Yeah, that's in the total. That's in the core.
The core?
Right.
Okay.
Yeah.
All right, so.
The core takes out food and energy, which are the most volatile items.
But the person who wrote this said services aren't really measured well.
Yeah, okay.
Okay.
I guess it's not so much whether it's measured well or not. If it's being measured the same way, then you're looking at
But
like
if it's in
numbers.
addition to all this,
No, it's in the core.
okay,
Yeah.
all right.
And that's why you see the core, both on consumer and producers, higher than the total.
Okay. All right, so things are looking up, looking down. Well, maybe just kind of,
I would say no surprises.
no surprises.
You know.
Okay, leading economic indicators.
Yep.
July down 0.4, 10 components that give a snapshot of the economy last 6 months, down negative 4%, previous 6 months, down 3.7%. That's all for the whole year, or the minus 3.7%.
From each 6-month interval.
Okay. The stock market and jobless claims only positives. 3 largest weightings were not. Wages, new orders, customer expectations make up 59% of the index. It remains weak. This indicator predicts when a recession begins after 3 straight negative readings. July was the 16th straight negative reading.
Right.
Longest streak since 2007 to 8.
Mm-hmm.
How do they get away with this, not calling it in?
Well, I think part of it has to do with it's not being confirmed by some other indicators, like jobless claims or job creation, the employment report. Usually you would suspect if this index has gone down 16 straight months, you would see, okay, geez, jobless claims are going up and we're not creating a lot of new jobs. But that hasn't been the case, because if we take a look at just a new job creation, it's been 31 straight months that the non-farm payrolls have gone up. You wouldn't see that if we were in a recession. Jobless claims keep going down. The key number with the jobless weekly claims is 250,000, because historically when it gets above 250,000, seems to affect the economy, and we haven't gotten that level, even though leading economic indicators have been bad for over a year.
Well, the last 4 weeks averaged 237,500. That's
It's
moving
getting
in
close.
that direction.
Oh yeah, yep. It's getting close, but it's taken 16 months to get there.
That's like saying the bullet's getting close, but it took a lot longer than we expected.
Yeah. Yeah. I mean, and leading economic indicators, although it was down 0.4 in the last report, that really was a better number than had been recent numbers, which were like 0.7 to 1%. So the loss is getting smaller. And the question is, does it go positive before it affects jobless claims or job creation?
Well, a lot of the famous people, like, I don't know whether it's Larry Summer or someone else, that, we've got to get rid of jobs to beat inflation.
Right. Yeah.
What's the purpose of the economy?
Yeah.
All right. So in the employment record reports are non-farm up by 187,
Yep.
31st straight month.
Yeah. You need 150,000 historically to help the economy, so you're still above that.
Yeah. Everything's, if not hunky-dory, not as bad as it could be.
Correct.
Labor force grew by 23,000.
Mm-hmm.
Wages up 0.4%, not exactly
No.
glorious.
Right.
4.4 over the past 12 months. Unemployment fell to 3.5%.
Mm-hmm.
How many people went out of the workforce?
Oh yeah. I mean, that's been a big piece of it. It's probably a lot. The rate is probably double that if you included those people. They do have another one, which is the U6 unemployment rate, which takes into account people who are unemployed and people who are, they call them discouraged workers. And that's close to 7%. And then you throw in people who are no longer workers because they're beyond discouraged, and that brings that up even higher.
I think I quoted that last month.
Yeah. Yeah.
So when we undiscourage those people, we'll know we've got a great economy.
Right.
Ladies and gentlemen, it has been a pleasure to have Mike Carnevale here with me. This has been the Long Hill Report. I'm Richard Morco, and until October, have a good month. Let's hope September beats the odds.
Correct.